Quality control. For quality control, there are two types of standards, SQC1, SA220. SQC1, quality controls for firms that perform audits and reviews of historical financial information and other assurance and related services engagement. SA220, quality control for an audit of financial statements. SQC1 is applicable to firm level and SA220 is applicable to particular engagement level. Both the standards deal with framework of audit quality. SQC1 applies to all engagements and deals with the quality at the level of firm. SA220 deals with the audit quality at individual audit engagement level. Besides above two standards, other standards on auditing, Code of Ethics issued by ICAI, and certain provisions of Companies Act 2013 facilitate quality control process. There also exist mechanism for review of quality control through Peer Review Board, Quality Review Board, NFRA. NFRA means National Financial Reporting Authority. SQC1, quality control for firms that perform audits and reviews of historical financial information and other assurance and related services engagements. SQC1 requires that firms should establish a system of quality control designed to provide it with reasonable assurance that the firm and its personnel comply with the professional standards and regulatory and legal requirements, and that reports issued by the firm or engagement partners are appropriate in the circumstances. Firm system of quality control should consist of policies designed to achieve these objectives. This quality control standard applies to all firms irrespective of their constitution. Elements of system of quality control. The firm system of quality control should include policies and procedures addressing each of the following elements. First element is leadership responsibilities for quality within the firm. Next, ethical requirements. Third, acceptance and continuance of client relationships and specific elements. Fourth, human resources. Fifth, engagement performance. Sixth, monitoring. Hint to remember these elements is, hint is HEMA-LE. H, human resources. E, ethical requirements. M, monitoring. A, acceptance and continuance of client relationships and specific engagements. L, legal responsibilities for quality within the firm. E, engagement performance. Hint is HEMA-LE. Quality control policies and procedures should be documented and communicated to the firm's personnel. By communicating, the firm recognizes the importance of obtaining feedback on its quality control system from its personnel. Therefore, the firm encourages its personnel to communicate their views or concerns on quality control matters. Five elements of system of quality control. Hint is HEMA-LE. H, human resources. E, ethical requirements. M, monitoring. A, acceptance and continuance of client relationships and specific engagements. L, leadership responsibilities for quality within the firm. E, engagement performance. Next, for under that first element is leadership responsibilities for quality within the firm. SQC1 requires firms to establish policies and procedures designed to promote an internal culture based on the recognition that quality is essential in performing engagements. Such policies and procedures should require the firm's chief executive officer or the firm's managing partner to assume ultimate responsibilities for the firm's system of quality control. The example set by firm's leadership encourages an inner culture that recognizes high quality audit work. Further, persons assigned operational responsibility for the firm's quality control system by the firm's chief executive officer or managing partner should have sufficient and appropriate experience, ability, and the necessary authority to assume that responsibility. It has been laid down clearly that firm's business strategy is subject to the overriding requirement for the firm to achieve quality in all the engagements that the firm performs. Essentially, it implies that audit quality is paramount in all engagements. It is non-negotiable. In this regard, it should be ensured that the firm assigns its management responsibilities so that commercial considerations do not override the quality of the work performed. The firm's policies and procedures addressing performance evaluation compensation, and promotion, including incentive systems with regard to its personnel, are designed to demonstrate the firm's overriding commitment to the quality, and the firm devotes sufficient resources for the development, documentation, and support of its quality control policies and procedures. Second element of system of quality control is ethical requirements. A firm should establish policies and procedures designed to provide it with a reasonable assurance that the firm and its personnel comply with the relevant ethical requirements contained in the Code of Ethics issued by ICAI. The code establishes the fundamental principles of professional ethics, which includes integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. The fundamental principles should be emphasized by actions of the leadership of the firm, spreading awareness and training, monitoring, a process for dealing with non-compliance. Observance of independence in all engagements is the founding requirement. The firm should establish policies and procedures designed to provide it with reasonable assurance that the firm, its personnel, and including experts contracted by the firm and network firm personnel, maintain independence where required by the code. Such policies and procedures should enable the firm to communicate its independence requirements to its personnel, identify and evaluate circumstances and relationships that create threats to independence, and to take appropriate action to eliminate those threats or reduce them to an acceptable level by applying safeguards or, if considered appropriate, to withdraw from the engagement. There should exist a mechanism in the firm by which the engagement partners provide the firm with the relevant information about client engagements and personnel of the firm, promptly notify firm of the circumstances and relationships that create a threat to independence. All breaches of independence should be promptly notified to firm for appropriate action. Its objective is to ensure that independence requirements are satisfied. At least annually, the firm should obtain a written confirmation of compliance with its policies and procedures on independence from all firm personnel required to be independent in terms of the requirements of the code. SQC1 lays special emphasis on familiarity threat. Using the same senior personnel on assurance engagements over a prolonged period may impair the quality of performance of the engagement. Therefore, the firm should establish criteria for determining the need for safeguards to address this threat. In determining appropriate criteria, the firm considers such matters as: first matter is the nature of the engagement, including the extent to which it involves a matter of public interest, and the length of the service of the senior personnel on the engagement. Examples of safeguards include rotating the senior personnel, or requiring an engagement quality control review. The familiarity threat is particularly relevant in the context of financial statements audits of listed entities. For these audits, the engagement partner should be rotated after a predefined period, normally not more than 7 years, except in cases where audit of listed entities is conducted by a sole practitioner. However, to ensure quality control exists in such firms and appropriate reports are issued, there is a process for mandatory peer review of such firms. Third element of a system of quality control is acceptance and continuance of client relationships and specific engagements. A firm, before accepting an engagement, should acquire vital information about the client. Such an information should help a firm to decide about its ICC: integrity, competence, compliance. First, integrity. Integrity of the client, promoters, and key managerial personnel. C, competence. Competence including capabilities, time, and resources to perform engagement. Compliance. Compliance with ethical requirements. The firm should obtain such information as it considers necessary in the circumstances before accepting an engagement with a new client, when deciding whether to continue an existing engagement, and when considering acceptance of a new engagement with an existing client. Where issues have been identified and the firm decides to accept or continue the client relationship or the specific engagement, it should document how the issues were resolved. With regard to integrity of the client, matters that the firm considers includes example. It is important question. With regard to the integrity of the client, what are the matters that the firm should consider? The identity and business reputation of the client's principal owners, key management, related parties, and those charged with governance, nature of client operations, including its business practices, information concerning the attitude of the client's principal owners, key management, and those charged with its governance towards such matters as aggressive interpretation of the accounting standards and the internal control environment, whether the client is aggressively concerned with maintaining the firm's fees as low as possible, indications of an inappropriate limitation in the scope of the work, indications that the client might be involved in money laundering or other criminal activities, the reasons for the proposed appointment of the firm and non-reappointment of the previous firm, the extent of knowledge a firm will have regarding the integrity of a client will generally grow within the context of an ongoing relationship with that client. In considering whether the firm has the capabilities, competence, time and resources to undertake an engagement, following matters have to be taken into consideration. Firm personnel have knowledge of relevant industries or subject matters. Firm personnel have experience with relevant regulatory or reporting requirements or the ability to gain the necessary skills and knowledge effectively. The firm has sufficient personnel with the necessary capabilities and competence. Experts are available if needed. Individuals meeting the criteria and eligibility requirements to perform engagement quality control review are available where applicable, and firm would be able to complete the engagement within the reporting deadline. If there is any conflict of interest between the firm and the client, it should be properly resolved before accepting the engagement. Where the firm obtains information that would have caused it to decline an engagement, if that information had been obtainable earlier, policies and procedures on the continuance of the engagement and the client relationship should include consideration of professional and legal responsibilities that apply to the circumstances, including whether there is a requirement for the firm to report to the person or persons who made the appointment, or in some cases to regulatory authorities, and the possibility of withdrawing from the engagement or from both the engagements and the client relationship. Policies and procedures on withdrawal from an engagement and from both the engagement and the client relationship address issues that include the following. First one, discussing with the appropriate level of client's management and those charged with its governance regarding the appropriate action that the firm might take based on the relevant facts and circumstances. If the firm determines that it is appropriate to withdraw, discussing with the appropriate level of client's management and those charged with its governance withdrawal from the engagement or from both the engagement and the client relationship and the reasons for the withdrawal, considering whether there is a professional, regulatory or legal requirement for the firm to remain in place or for the firm to report the withdrawal from the engagement or from both the engagement and the client relationship, together with the reasons for withdrawal to the regulatory authorities. Documenting significant issues, consultations, conclusions, and the basis for the conclusions. Fourth element of quality control is human resources. The firm should establish policies and procedures designed to provide it with reasonable assurance that it has sufficient personnel with the capabilities, competence, and commitment to ethical principles necessary to perform its engagements in accordance with the professional standards and regulatory and legal requirements, and to enable the firm or engagement partners to issue reports that are appropriate in the circumstances. Such policies and procedures should address relevant HR, human resource issues, including recruitment, compensation, training, career development, performance evaluation, etc. There should be emphasis on the continuing professional development of firm's personnel The firm should assign a responsibility for each engagement to an engagement partner. The firm should establish policies and procedures requiring that the identity and the role of the engagement partner are communicated to the key members of the client's management and those charged with governance. The engagement partner has the appropriate capabilities, competence, authority, and time to perform the role, and the responsibilities of the engagement partner are clearly defined and communicated to that partner. Each engagement team should be able to carry out its responsibilities with necessary competence and skill. Therefore, the firm should ensure suitable people are available and also groom them for their role. The firm should assess performance of their partners and team members, keeping in mind their commitment towards quality. Fourth element of system of quality control is engagement performance. Consistency in quality of engagement performance is achieved through briefing of engagement teams of their objectives, process for complying with engagement standards, process of engagement supervision and training, methods of reviewing performance of work, appropriate documentation of work performed. Consultation in difficult or contentious matters. Consultation should take place in difficult or contentious matters pertaining to an engagement. Consultation includes discussion at the appropriate professional level with individuals within or outside the firm who have specialist expertise to resolve a difficult or contentious matters. It helps to promote quality and improves the application of professional judgment. Consultation procedures require consultation with those having appropriate knowledge, seniority, and experience within the firm or outside the firm on significant technical, ethical, and other matters, and appropriate documentation and implementation of the conclusions resulting from consultations. A firm needing to consult externally, for example, a firm without appropriate internal resources may take advantage of advisory services provided by other firms or professionals and regulatory bodies. Complete and proper documentation should be maintained on issues involved and results of consultation. Engagement Quality Control Review, EQCR. Significant judgments made in an engagement should be reviewed by an engagement quality control reviewer for taking an objective view before the report is issued. The extent of review depends on the complexity of the engagement and the risk that the report might not be appropriate in the circumstances. The review does not reduce the responsibilities of the engagement partner. Engagement Quality Control Review is mandatory for all audits of financial statements of listed entities. In respect of other engagements, the firm should devise criteria to determine cases requiring performance of engagement of quality control review. An engagement quality control review for audits of financial statements of listed entities includes considering the following: the engagement team's evaluation of the firm's independence in relation to the specific engagement, significant risks identified during the engagement and the responses to those risks, judgments made, particularly with respect to materiality and significant risks, whether appropriate consultation has taken place on matters involving difference of opinion or other difficult or contentious matters, and the conclusions arising from those consultations. The significance and disposition of corrected and uncorrected misstatements identified during the engagement. The matters to be communicated to the management and those charged with the governance, and where applicable, other parties such as regulatory bodies. Whether working papers selected for review reflect the work performed in relation to the significant judgments and support the conclusions reached. The appropriateness of the report to be issued. Engagement Quality Control Reviewer is a partner, other person in the firm, who should be member of ICAI, suitably qualified external person, or a team made up of such individuals. In this regard, suitably qualified external person refers to an individual outside the firm with the capabilities and competence to act as an external partner. Engagement partner. Act as an engagement partner. For example, a partner or an employee with the appropriate experience of another firm can be an EQCR. In addition, the Engagement Quality Control Reviewer for an audit of financial statements of a listed entity is an individual with sufficient and appropriate experience and authority to act as an audit engagement partner on audits of financial statements of listed entities. It is necessary to maintain objectivity of such reviewer. Therefore, participation in engagement or making decisions for engagement team is to be avoided at all costs. However, engagement partner may consult engagement quality control reviewer during the engagement so as not to compromise his objectivity and eligibility to perform the role. Where the nature and extent of the consultations become significant, however, care is taken by both the engagement team and the reviewer to maintain the reviewer's objectivity. Where this is not possible, another individual within the firm or a suitable qualified external person is appointed to take on the role of either the engagement quality control reviewer or the person to be consulted on the engagement. The firm's policy should provide for the replacement of the engagement quality control reviewer where the ability to perform an objective review may be impaired. Difference of opinion. There might be difference of opinion within the engagement team with those consulted and between engagement partner and EQCR also. The report should only be issued after resolution of such differences. In case recommendations of the engagement quality control reviewer are not accepted by engagement partner and matter is not resolved to reviewer's satisfaction, the matter should be resolved by following established procedures of the firm, like by consulting with another practitioner or firm or a professional or regulatory body. Engagement documentation. The firm should establish policies and procedures for engagement team to complete the assembly of final engagement files on a timely basis after the engagement reports have been finalized. Engagement files should be completed in not more than 60 days after the date of auditor's report in case of audit engagements and in other cases within the limits appropriate to the engagement. Where two or more different reports are issued in respect of the same subject matter information of an entity, the firm's policies and procedures related to time limits for the assembly of the final engagement files should be considered for each report as if it were for a separate engagement. This may, for example, be the case when the firm issues an audit report on a component's financial information for group consolidation purpose, and at a subsequent date, an auditor's report on the same financial information for statutory purpose needs to be given. Policies and procedures should be designed to maintain the confidentiality, safeguard, integrity, accessibility, and retrievability of engagement documentation. Care should be taken that policies and procedures on documentation of the engagement quality control review should require documentation that the procedures required by the firm's policies on engagement quality control review have been performed. The engagement quality control review has been completed before the report is issued, and the reviewer is not aware of any unresolved matters that would cause the reviewer to believe that the significant judgments the engagement team made and the conclusions they reached were not appropriate. Unless otherwise specified by law or regulation, engagement documentation is the property of the firm. The firm may, at its discretion, make portions of or extracts from engagement documentation available to the clients, provided such disclosure does not undermine the validity of the work performed, or in case of assurance engagements, the independence of the firm or its personnel. Engagement documentation has to be retained for a period of time sufficient to permit those performing monitoring procedures to evaluate the firm's compliance with its system of quality control, or for a longer period if required by law or regulation. In the specific case of audit engagements, the retention period ordinarily is not shorter than 7 years from the date of auditor's report, or if later, the date of group auditor's report. Last element of quality control is monitoring. The firm should ensure that policies and procedures related to the system of quality control are relevant, adequate, operating effectively, and complied with in practice. Such policies and procedures should include an ongoing consideration and evaluation of the firm's system of quality control, including a periodical inspection of a selection of completed engagements. Quality control of engagements has to be monitored taking into account following factors. Decide whether quality control system of a firm has been appropriately designed and effectively implemented. Examining whether new developments in the professional standards, legal and regulatory requirements have been reflected in the quality control policies. Conducting monitoring by entrusting the responsibility of monitoring process to a partner or other persons with sufficient and appropriate experience and authority in the firm, dealing with complaints and allegations against the firm or any employees of non-compliance with professional standards or appropriate regulatory requirements by a person within the firm or outside the firm. Take appropriate remedial actions against the personnel who did not conform to quality control policies. Taking action when deficiencies in the design or operation of firm's quality control policies and procedures